Punita Kumar Sinha, who's now joining in on the show. Punita, hi there. Good to have you on board. Wishing you a happy new year. And as we're ushering in the brand new year with elections on the horizon and lots more to look forward to, what do you expect for the year ahead? Are the stars aligned as they were in 2023?
Well, a happy new year to all the viewers. So I think 2024, the beginning of the year, we're seeing much of the same of what we saw in 2023. And I think that momentum, the short-term momentum that we saw in December, I think that's going to continue for a while. But the focus is beginning to shift more towards large caps, in my view. While the momentum in small cap does continue, I think slowly, the value in the large cap is more attractive, and so investors will start looking at that. But of course, this year is going to be focused on elections, geopolitics, and interest rates. And so I think that's the three main drivers that we're going to be seeing the world grappling with.
Punita, what should be a basic strategy for 2024? Conserve capital, take some profits off the table, or just ride the good times?
Well, for the very, very short term, I would say you ride the good times, but I think you've got to become cautious, rather defensive, because there will be lots of news around geopolitics, around interest rates, that will create volatility in the markets, and then elections, particularly in the US in the second half. So while the first few months of the year will be focused more on geopolitics and interest rates, I think it's the second half of the year, post-April, where the narrative on US elections is going to take center stage. The interest rates cuts, whether they happen or not, nobody is anyway expecting them to happen in the first quarter of this calendar year, but more likely, in the second half of the year. So that's going to be an important driver in the second half. And then I think right now, of course, the focus should be on geopolitics, because the war seems to be getting a little bit heated up. It may come under control or it may escalate. It's hard to say. And then, of course, the tensions in the Red Sea and what that means for supply chain. So I think we need to focus on that. Therefore, I would say more caution would be good, be more defensive, and of course, focus much more on value and the cushion of safety that you need in a market where valuations are, in some sectors, getting a little frothy.
Punita, interesting that you say that. Where is it that you actually find that comfort and cushion in the market to hide behind then?
Well, I mean, to find that comfort more outside India, frankly, than in India. But within India, I think the whole market obviously has re-rated quite substantially. But if you look at the relative valuations, I think large caps in general are more attractively valued as compared to some of the small caps and mid caps. But the momentum is clearly more in the small and mid caps. That's why I think you slowly sort of start moving into areas where there's cushion of safety. I think the PSU basket has some more appealing valuations as compared to the private sector. So I think that's an area potentially that could still see some flows. And I think across sectors, of course, every sector has rallied, some have rallied less. So generally, people are going to look towards laggards if the companies are doing fundamentally okay.
Punita, there is this widespread acknowledgement by everyone that flows will come back into India, as most of the emerging market funds are either neutral or they're marginally overweight India. Given that China is losing its sheen, growth is a concern, policy framework, policy making is a concern, large amount of flows will navigate back from China to India. And that happens, we could look at a situation of where DIs are buying and FIs are buying. Is that a realistic setup scenario for 2024? FIs could come back and they could be buying from both hands?
Well, I actually think slightly differently. I think that China may actually see a recovery, and the flows actually have not been as strong to China as they have been to India. Now, of course, compared to domestic flows, foreign flows have not been as strong. But I think if interest rates in the US get cut and globally, China will benefit. And as I said, there is some valuation cushion there. So I expect that flows into China may possibly increase as opposed to decreasing. And we've seen a little bit of that in December. So while India, has been a beneficiary of outflows from China, India's really been driven by domestic flows. And I think that is not going to change. So I wouldn't worry so much if foreign flows come in a big way or not. And if they do come, that they obviously, because of liquidity reasons, will go more towards the large caps, which is why I'm saying large caps are, relatively better place potentially to perform.
Okay, Punita, great to have you on the show. We'll let you go on that note and have an excellent 2024. I'm sure we'll meet again soon.
Thank you.
Well, the one space which has been on